the IPIP committee. At the same time, we've got a lot of interest, recently by the IPIP community to have a session on financial management. A lot of us, a lot of us belong to IT sector and don't get exposure to the financial aspects, and maybe losing some great opportunities due to this. But we're lucky to have two very experienced guests from the Irish financial industry who are here to help the IPIP community for securing and better managing our wealth. This webinar is for you if you are in the IT sector and looking to get a grip on better management of your finance with a focus on tax and pension. Be it a startup or contract job, employment, working remote, or moving the country, our experts are here today who will try their best to guide you all as well. Before I go to introduce my panelists, I'm just gonna give a bit of background for the IPIP to set the context, and then we go from there to the rest of the session.
IPIP, Irish Pakistani ICT Professionals. An open access platform for present and future Irish Pakistani ICT professionals. Professional and social networking. Information and training seminars. Career guidance events. Upskilling sessions. Community get-togethers. Irish Pakistani ICT professionals. Join us, guide us, contribute and play your role in this community building project. IPIP, Irish Pakistani ICT professionals.
All right, so welcome back. So now we know the basic idea behind IPIP. Next, I'll go to this session, and I've got with me like Irfan and Brendan today. So for Brendan, his background, he's a financial and pensions advisor, having established his own financial advisory and insurance firm almost 20 years ago. He advises on key areas of pensions, investments, and life insurance. And Brendan works closely with the professionals, business owners, and individuals to help them build up their wealth via portfolio planning in a tax-efficient manner. Hi, Brendan. Hope you're fine.
Hi, Ahmed. How are you?
Good, not too bad. Next, we go to Irfan. Irfan is CEO at intex.ie. He's a registered auditor and business consultant with 15 plus years of experience in accounting, audit, finance, and tax. He has got comprehensive background in audit, budget formulation, tax, and financial planning with administration. Hi, Irfan.
Hello, Ahmed. Thank you for inviting me. Actually, I was sharing all these links on my social media pages. So you maybe see I share on all the pages and groups. So thank you for inviting me. Thank you, IPIP. Thank you, Nawaz. And thank you all the people who sent a number of questions for us today on a Sunday evening. I'm sure Brandon is ready as well. So let's see, we'll go through all of your questions.
Yeah, sure. Like I want to say, like on behalf of like IPIP as well, that, you guys have taken out time over the weekend, and we are looking forward, and the community is looking forward to take your guidance. And like upfront, we had, sent some surveys to our groups, and we have got some list of questions like upfront as well. At the same time, I want to like encourage so like all those of you who are live, who are listening to us either on the Facebook or YouTube or LinkedIn, this is a session for you guys. At any point of time, please like keep sending us like your list of questions, and we'll try our best to cover as many of them as possible. If we are not able to cover because we have got only an hour, but we will have a follow-up, and so the committee of IPIP will also look into the answers or questions with our experts and come back to you later. So one of the thing I was talking to like Irfan and Brendan offline, and I understood that a key issue they see is that people do not transfer their wealth or income from their careers in business in tax efficient manners during their strong income generating years. So let us understand on this a bit more on today's session. Before I delve into detail of the sessions, so what I'm gonna do is I'm gonna ask Brendan, followed by Irfan, to share us a bit of insights like about their journey, about their scope, and why it really like matters, that why we IT guys even need to spend some time to get exposure to the financial matters. So here I'm going to first share the content for Brendan, and
I
we're gonna
think we
start.
will not just for the introduction for a minute for each person.
Oh yeah, sure.
Yeah. So
Like,
maybe just Brendan go ahead, and then I'll go, and then we can go to the questions. So people know to whom they're talking to.
Yep.
yeah, sure.
Hi, everybody. Thanks to IPIP. This is a great opportunity for me. I've done some in the past, but a live one is kind of new. So I'm looking forward to it. My background is I was in a bank in the 90s for about 11 years. Small bank. It was taken over. My division was made obsolete, so I was made redundant. So I set up a financial advisory firm in around 2000, 2001. Saw the internet was coming. So I had a heavy presence on the internet ever since then. Focus on business owners, professionals. I really enjoy what I do. So I focus on creating wealth and protecting wealth. And it's good to hear some interesting questions, because it would appear that a lot of people don't understand this area, and that's both Irish and Pakistani community. So I'll go through it and I'll keep it as simple as possible. Thank you.
Thanks so much, Brendan. Yeah, really appreciate. Now go to Irfan, if you can give a bit of background as well, Irfan.
Thank you very much. Do you want to share my slide, or should I do from here now?
Yeah, we can start with the slides. That will be actually helpful. So let me just share slides.
Yes.
Right. Can you see my slides?
Yes, I can. Yeah.
Excellent.
No, that's Intex. That's my company is. I'm 15 years into business. Well, more than 15 years if you include my accounting and everything. What we do accounts, VAT, and all those, but that's not all. We actually have adopted the digital age. I think if I share, that'd be better. Can you cancel your sharing, then I will do from my end.
All right.
Yes. Yeah. Because that will help me to do more at my end. Yeah. Sorry. Yeah.
Yeah, we can see. Yeah. Okay. So go to the presentation.
Yeah, so we have a number of companies. Number one is we do Intex, which is mainly do all the accounts, VAT, business registration. And then we have an umbrella company, Beacon Locum Limited. Under that company, we do help doctors who are doing locums for their clients, for the HSC or those companies. As I mentioned, we have adopted the digital age, which means we understand the digital assets, which is main likely is a cryptocurrency and the Bitcoins. We people who have invested in Bitcoin, people who is mining or trading in there, we can help them to fill their accounts and tax returns. My journey was started with the more likely rebates, and rebates is a tax refund company in Ireland. If all the PAYE workers, if they do doctors or IT not contractors, not the self-employed one, the PAY worker. If they are doing jobs in Ireland, we help them. We review their 4-year taxes back, and we arrange their tax back on there based on no refund, no fee. And when we were doing rebates for PAY worker, we noticed a lot of self-employed people, the contractors or landlords, directors, they were emailing us to help them. So we set up an online. It's those both companies are fully online, where we can file tax return for our clients, either they are landlord or small SMEs, and they can sign online. We prepare draft everything online, deals with revenue. For the contracting, which is most relevant for today for IPIP, is that we do contracting services, umbrella company for IT contractors who are not have their own companies, but they work for their banks or bigger companies. We run their payroll, we provide professional indemnity, we help them to save their taxes, make sure they get more net pay. Our mission is to provide the services and from local to national level and national to international level. Our growth is, we started with few clients, to be honest, and then at the moment we have 5,000 plus clients. We are based in Sandyford. That's look in 5,000 plus clients which includes PAY worker, which has landlords, IT contractors, doctors. And when we say we have our clients are from Google employee, Facebook employees, Mason Hayes Currents, a lot of bigger companies employees are our client for refund and tax return, and we have a lot of international companies as well. Under rebates is normally, as I mentioned, for PAYE worker. For tax return, we do for self-employed, in-tax contracting for IT, and Beacon Locum for doctors. I also attend a lot of expos. I'm speaker at Dubai Expo. I was speaker in Going Global Live London. I was speaker in Ukraine Invest Pro Bosco conference. I recently came back from Italy. We do people who want to set up companies in Ireland as a gateway to Europe, or people who wants to look after their businesses in Ireland, our product to reach to Europe as a gateway. We help them to set up from Ireland. I don't want to take most of the time. This is mainly our story is, and so this is if people want to, and hopefully, given my experience and my businesses, we'll be able to help our clients.
All right, thanks so much, Irfan. Very detailed.
It's a bit long interview than maybe you expected. Introduction.
No, it's lovely started. So thanks so much. Next, I go to Brendan. I'm gonna share the content for Brendan that he has prepared to share with the IB community, and the stage will be then shared with Brendan. So just give me a second. Okay. So let me share the entire screen, and then I'm gonna go faster. Can you guys now see the slides?
Yeah, we can.
Yep.
So over to you, Brendan, then.
Perfect. Thanks very much, Ahmed. So I'm a financial advisor, long time in business, 20 years. Really enjoy helping people with their money and the management of their money. I suppose one big thing that people don't realize is that financial planning and traditional financial planning, as in pensions, investments, and life assurance, it's not that difficult. It just needs to be explained properly and kept simple. So I really talk about asset building, because asset building is where you want to be. So asset building, like you say, you're in your 30s and you look at 20-year window, you say, right, my career is started, I'm making good money, but one day I might want to get off the corporate ladder. And if I get off the corporate ladder or go part-time or set up on my own consultancy, I need assets, because what assets do is they produce income. So, for example, if you had an asset of €1 million or €500,000, but let's leave it at maybe €1 million at 60 via pension fund or investments or property. Well, if that asset produces 5% return per annum, that's €50,000. So that means you have 4,000 income per month, and that's the way you look at it. And sometimes that's not explained to people, and that's why you build assets. Every asset delivers a return, be it property, be it the bank deposits. I know not at the moment, be it investments, equities, shares, cryptocurrency, all that. Their primary objective and why people invest in them is to get an income in the future, now or in the future. So if we move on there, Ahmed, just on the next slide. So here's the challenge, which I'll get into at the end of my presentation: how to create €1 million asset. And also, not to make it too long, the heading there, it would be how to create €1 million asset in a tax efficient manner. So that's a challenge. It's not that much of a challenge if people actually put in place a financial plan with pensions, investments, and that type of thing. Because believe it or not, most people start financial planning and pension planning late into their 40s or 50s, and this then becomes a challenge. So we can move on there, Amajit. So my background came from banking. In the 90s, it was very interesting. There was a lot of technology was changing things and new products. And I suppose Ireland opened up being a member of the European Union. But what I did notice in the bank side, and I got my skill from there, is that people actually didn't manage their money too well. And I learned ways and means of figuring out that there has to be better ways of managing money. And I see money making money, full stop. That's money. As you sleep, as you eat, as you work, has to make money. That's the true sense of investment. And sometimes people don't understand that, and they leave their money in bank deposits accounts. Inflation erodes it, gets rid of it. No, very little return. And that's a common thing all over the world. Ireland, Pakistan, everywhere. It's very common that people are afraid. And I think it comes back to the Great Recession and somehow that people were financially scarred. So they're afraid of taking a risk with their money, but you can't be. The market, and I'm saying like the equity market, pension funds, and all that type of thing, that rewards the brave. And also, it's down to timing. So, what I practice with SME company owners, individuals, families is right. You're at this point. Let's take it like a journey. You're at this point in your career, in your family, and then you actually want to get to a next point and further points down the line. So it's your journey is essentially where you're going to go, and what you must do when you earn money in a company or a job is you must transfer that income, call it the wealth, away from you and the company and in your job over to your individual nature. And that's what you do to diversify. So I'm sure some of you work for Google and Facebook and all the big tech giants and big companies. Well, someday they mightn't be there 20 years down the line, or they might downscale or whatever. So what you do is you look at that, and if your income is centered around that particular institution or company, multinational, and even a small company, you move your income away into pensions, investments, life assurance, various other vehicles that one day you have your own asset base. So therefore, if you get made redundant, you don't want to work anymore, then your assets kick in. Now, we advise on a kind of a service, some of the multinationals. So I understand some of your needs around pensions, contractors, and that you move around Europe and you're constantly moving. So a simple idea, if we move ahead there, Ahmed, on the whole, so you build assets over medium to long term, protect professionals and their family. That's life assurance, income protection, say like a rainy day fund. If anything happened to you, sickness, accident, illness, and perhaps death. And then you don't want to be left that you cannot support yourself or your family. So that's where insurance kicked in. In terms of pensions, well, they're one of the greatest assets in this country anybody can have because they're very tax efficient. Three key things. When you put money into a pension, number one, put money into a pension, you get tax relief, and that's up to 40%. So if you put €100 a month into a pension, it only costs you €60. Number two, if it grows at 5 or 6 or 10% per annum, that's tax-free, and that's tax-free compounded every year. That's why they grow so exponentially over 20, 30 years. And number three, when you retire, you get 25% of the fund. So say the fund was $500,000, you would get 125,000 tax-free, pay down a mortgage, buy another property at home or abroad. or just generally enjoy your life. And that's what makes them so good and one of the best assets you can ever have. And I talk about pillars. So say there's three pillars when it comes to your future and your family finances, your own family. So number one, when you retire, you want a large fund. That's a private pension. Number two is your tax-free lump sum that you use for income or to enjoy your life. And then number three pillar would be a state pension. So you're entitled to state pensions here. Now, down the line in maybe 20, 25 years, one would expect it to still be there, but mightn't be the same as it is today. It's quite generous. And it's quite generous in a number of economies, Western economies, that probably with the graying of the population might be as strong in 25 years. That's why it's a third pillar. The first pillar is your own pension. The second pillar is your tax-free lump sums and your own investments, your own money. Third pillar would be the state pension, but they all add up together to create income. And if you're married, single or married, when you retire in this country at 65, nice Irish government give you 36,000 annual income tax exemption. You don't pay a penny, maybe small PRSI, USC, but you don't pay a penny income tax. So that's the amount you fund for 3,000 a month. That's and you build up your assets and you put away your money, and it's extremely tax efficient. And if it's done on a regular, disciplined basis, that's where you win. That's where you win. So for example, I started with a client. He's about 38. He's quite successful. Kitchen installation business, makes a lot of money. He started at about 12, 13. About 7 years ago, I met him first, and he had a pension of 12,000. Now he has just shy of 400,000 because he believes in the process and he's transferring wealth from his company into his individual entity name. But he's been working since 14. All right. His ambition is to retire at 55. And we'll be well on the way for that because he works very hard, 14 hours a day. And he has since he was 14 years of age. So you have to align financial planning, pensions, etc., with your own personal goals too. Like I want to retire comfortably. I want to do something else. I might want to get up at 6 a.m. every morning when I'm 55 or 60. So therefore, if you create your own assets and you have a serious goal in mind, which is a numeric goal, really, you can step off that corporate ladder and you can do well for yourself and do something else. And, everybody has different pensions. You can wrap them up. I call it line of sight. So you get 3 or 4 different pensions from different companies. You pull it into one, and it's called line of sight. You know the return. Say it's 5 or 6 or 8%. You know what you're getting per annum. Now, when it comes to risk, there is risk involved, but you take calculated risk. Calculated risk means if you're in 30s or 40s, that you essentially can build up your funds and you can expose them to the equity market. And that's in funds now. It's not direct equities. Direct equities is a wee bit different, as a lot of people are trading online. It's very financially risky. You have to be careful with it. Pensions and investments are legal instruments backed by Europe and the Irish state that are there. And that's how number one, traditional financial planning is how you build your wealth. You can always build up your own separate holding in stock market, but you got to be careful of that. So the solution we're looking at, if there was a 35-year-old, now this is a heavy amount because I was trying to get the figures. So you can start pensions at any amount you're comfortable with, but it's just pure example. 35-year-old running their own business or an IT contractor, making good money. They put in €925 per month into a pension. It grows at 6% per annum, again tax free. That fund will be worth 1,024,528 at 65 and higher at 70. Net cost is €555 per month because you get tax relief. Now, a lot of you guys are earning good money. You might be maxing out in your pensions, and there's small little tips and what I bring to people to look at how they can maximize their pensions and their assets. And if you see that there, if you did have that €1 million pension, you get 240,000 tax free. It's a bit higher, but I left it at that. So you pay 10,000 tax on the million and you walk away with 240,000 and you've about 750,000 as a fund to draw down income every year. And that's how it operates. If you had 750,000, it's growing at 5% per annum, you would get 35,000 income per annum. Okay. So it's a great business. I enjoy it, and if you keep it to a simple way of discussing, it's about building your assets and protecting your assets, and we all want to do that. And I'm here to help. My contact details are there. As I said, I'm local in Selbridge, but we do a lot online. We've got 3 or 4 different websites, and we can share them. So we're delighted to help you. Thank you very much. Thank you, IPIP.
Thanks very much, Brendan. Really appreciate for very detailed insights. Just to check, so you are based in Selbridge, right, Brendan?
Yeah.
Okay.
But we do everything online these days. We do Zoom. We could do virtual meetings. Not a problem. Not a problem whatsoever.
And Irfan, you are based in Dublin as well, right?
Dublin, Sandy Ford, yes.
Okay.
No, so Brandon, in order for me to secure €675,000 a year when I retired, I must pay €925 every month.
The magic figure for a lot of people is 800,000, but you can go above that. 800,000, the government, the tax-free option in that is 25%, 200,000. Now, company directors and running their own business can go higher, but years ago it was much higher. But unfortunately, the crash made the government a bit mean, so they capped it at 800,000. But you can.
How many years I will be getting that 75,000 each year?
No, that figure was about 35,000. All right, so you 750, you got 5%. All right, so you'd have about 35,000 income. Now, if your wife is also working and she has a pension, you got to be careful of this, and this is where you do some drawdown pension planning. So you're given, as a married person at 65, 36,000 annual tax exemption. Above that, round it off to 40. Above that, you're taxed at 40%. So if you draw down pensions at 60,000, well, it's not worthwhile. You pay maybe 12,000 tax on that. Right? So you're better off drawing pensions at 40 to 50 and then maximizing your tax-free lump sums, making sure you have enough money and being quite tax efficient. And that's the key thing.
Okay.
So, all right, folks, now let's go to the next section. So the way we have done is, so based on the input and the request of the IPIP members who have been sending us some questions, I divided it into, sections, and we go, step by step. And some of the questions are directly, questions, and some of, because there are many questions on the same area. So I have, formulated into a different way to ask you, your opinion. So let me go to the first area of managing tax for the tax startups. And the first, if I go to the first point that the group was interested to understand was, so maybe for this one I'll go to Irfan first, and if Brendan, if you want to jump in as well later on.
Yeah.
So some of the IT folks in the IP group have industrial job experience for 10 plus years. And some of them would like to kick off startup IT company. They have many ideas, and they have concrete ideas as well with technical acumen and confidence on the market segment for their product. But the major factor that is holding them back, according to themselves, is the lack of financial expertise. So, Irfan, in your opinion, what would be your advice to such folks? Can one be successful IT entrepreneur without financial expertise?
Absolutely, because everybody do not have to be financial expert. If everybody is a financial expert, then what the hell we gonna do there? I think they should be expert what they do it. They should be expert in their job and their business. That should the way it be. It should be. What they should do is normally, especially in our community in Pakistani, or why we call it Desi community. What happens? They don't take a financial advice when they come to startup. They just research it, and they never have that budget in advance. And my advice is, take the financial advice the day one, that how much they should be spending, and how the corporate structure should be, and where they should go for advice or seed money or business plan, or what they need for tax advice or legal advice. They should do this before they even set up the company. But what normally people do is, they just set up a company, start working, and telling his accountant after a year, oh, I have set up this company. And now accountant will be telling, oh, you are late, your accounts are late, or your annual return is late, now you need an audit, your audit exemption is gone. So that's the mistake they actually make. So anyone not need to be, what your question was, anyone not need to be a financial expert. They have to be expert what they do, and they should get the advice from some financial expert people.
Excellent, excellent. Thanks so much, Irfan. So on the same note, there is a very much related question that we have got is that someone has got IDA funding in Ireland, and he's already in the phase of building a product. And as a next step, of course, he's looking into managing the accounts. And you already have given the answer to take help from the account firms. But he's interested to understand a bit more that in order to set his sales target when he's pitching to IDA and like in general, he understand how much expense he will have from software, IT, and those kind of things. But what are the like other expenses that which one has to foresee at the very start of startup, like other than the pure technical expenses?
See, it depends on job to job and project to project. But the first thing, if they are getting a fund from Enterprise Ireland or IDA or any company or any even private sector, what they do an induction program. They do a course and day course or webinar or something. The person must understand that, and when they doing the business plans, make sure that is realistic business plan. And I would advise they engage the accountant from the day one to understand that, because not in our community, in many people, when they start a business, they make two major mistakes. They believe their sales are profit. So that's they counting their sales as profit, while their sales are not profit. You have expense and then profit. And the second mistake they do is every leads come to them, they think it's a customer. So every lead is not a customer, it is just a prospect. You have to work on that, and it might work, it might not work, and maybe 1% leads become, you have to understand how many leads convert into real business. So your question again come back to the first cost would be the company formation cost and the company running cost and the advisory cost. That is, they should be understanding. Once they understand that they have to hire an expert, and then they have to maybe have an office and those basic. That is major cost which they have to deal with, and then the rest of the cost is obviously with their projects.
Sure. Excellent. So just on the same topic, I think the next question is, like I want a bit of input from both of you guys is when it comes to, managing the tax and accounts and also the pension, and sometimes people are a bit afraid maybe it's too much costly, or maybe, so they don't know exactly what they can expect from those firms. So if I go to tax versus I go to the pension, so what kind of cost range, per month or per year, a normal, small limited companies like IT startups can expect to manage their pension and tax things?
Well, in relation to the tax, there is only very basic. You only pay tax on profit. If you're not making profit, you're not paying any tax. So I do not see why people are afraid of tax. If you charging a VAT, you charging VAT on your fee, you get your net fee, and then you charge 23%. When it's come to pension, I'm sure Brandon will fill this, but pension is to reduce your taxes. Actually, you have net profit of 100,000, and you don't want to pay 12.5% tax on that, or 56% of your PAY PRSI on that. You park that money, and money generate money for you, and you get that when you are not able to do tax, when you cannot do software, and when you're retired, when you start getting that money back, you actually saving that. So there is no cost involved for taxes or pension, as far I understand. This is just to save
like Irfan, so the point, yes, so I think this is like a very important point, but I think the folks were interested to understand when they like, instead of managing themselves, if they want to get to take the services of an account firm or the pension management firm, what kind of cost range they have to bear for from these firms?
For the IT for accounting, well, it cost in relation to, I have seen many IT or other people who are managing their own accounts, and they're filing their own tax return. And when I come to say, are you just trying to save €150 to file tax on your own, and wasting your couple of days and maybe even make mistake? Because even Form 11 has 30-40 pages and so many ticks you need to make it. And why the hell you want to save only €150 and do on your? Never ever do this, guys. Let the people do who are expert for that. If you cannot afford an 1800 euro or 150 euro for your personal tax, the first thing, don't start the business then. You are not ready. So in relation to cost is different. Some people are trader or you work from home and all those. I think you have this question that what type of company use. I'll answer that time. But the basic company cost is which has a one tractor and one secretary, two people payroll and VAT and all. It's between 1800 euro to 3000 euro a year, which include tax return for directors tax return, shareholders tax return, VAT, payroll, everything, and general advice liaising with the revenue. So, and if this company is very new, small, we mostly accountant don't charge them until they really start the work and they file the tax return. If they have only few transactions in the year one, they might only charge you 1,000 euro or 1,500 euro to do all your tax return and everything. Is a small company. But if you are sole trader or contractor and you only want to do your annual tax return, the cost is 150 euro. We do this online, but I have seen people doing for their own and making a lot of mistakes in there, and then they are subject to a lot of revenue audits. So cost vary, but it's between 1,000 euro to 3,000 euro, and I think you should not go to look for low cost, because obviously you will not get that attention. And you can go to a House of Fraser or Penny or Next, depending what type of service you want.
Yeah, sure, Irfan. So, like, can I go now to Brendan? From the pension administration.
Yeah, I'll just come in on the business side, because Irfan, what he said there interests me too. It's very good, because I have done business planning. I've written business plans, and yeah, I see the same mistakes he's talking about. If you're going to go out in business and set up on your own, you got to go for it, but you have to have a business plan, and you got to have I would call it strategic business plan, which is not a fluffy business plan that's 50 pages. I've seen an awful lot of them, and maybe 3 pages are relevant. So strategic business plan is milestones, deadlines, what you're going to do, whether you raise capital, how you do that, your sales, your profit, your margins. I think a lot of people jump into business and they, as Irfan said, they discover these problems after a couple of years. But if you really want to be successful, you create a business plan, and then you do the financials with a professional like Irfan to understand them, and your profit. This is the biggest issue: your profit margins, how much you make out of it, and what it's doing for you. And I see a lot of, unfortunately, people that are successful and then they don't do the pension planning, and the market change. Global economic winds change all the time. Recessions comes and they lost. A very interesting thing I say to people, sole traders in particular, but it's anybody. If you set up a business and you're making money, so let's say you're making 5,000-10,000 a month or something, turnover, not necessarily income. What you would do is you would take 20-25% of that income, and you'd put it into a separate account, deposit account, and you build it up to pay your tax the next year. But the clever thing, and Irfan can back me up in, the clever thing would be to build up that money. So say you built up 20, 30, 40,000 over 2 years. Well, then you can fire that into your pension and reduce your tax bill. So if you fire 10,000 into a pension, you can actually do it for last year, which is, it'll save you 4,000, and you can do it for this year. So you save 4,000, then you don't pay preliminary. So you're saving thousands. Okay. And I think business people, I always use this phrase: when you're running your own business and you're very business orientated, it's 24/7, and then the business becomes greater than thou. So therefore, you're immersed in it. It's really killing you. But what you're meant to do, and this is in all the studies, is take that wealth in your 20s, 30s, 40s, 50s, and transfer it over to other areas, and mainly pensions, investments, and tax efficient areas. So if, like, for example, if you have an executive pension, which is a group scheme pension, if you're a limited company and you built up a big fund over 20 years and someone sues you for negligence, they cannot touch the executive pension. That's an Irish law and European law. They cannot touch it. But they can touch everything else, all your cash, your assets, your family home, everything. They executive pension, because it's ring fenced and trusts. And I think what you need to do at times, I don't really talk necessarily about pensions. I talk about financial planning, creating your own financial plan, or even strip out the word financial and just say plan. You want to plan, you want money, you want to retire well, you want to look after yourself, protect yourself. And it works quite well.
Because Brandon, because this is program is more for a Pakistani community, and I have a lot of my clients from my own community, and I like to give some examples. Maybe people do. I have client who had a lot of big businesses, and they had a cash-rich businesses. And when we were telling them put money into the pension or do some asset, or they say, no, I have bought that property, I have bought that property, I invested
Yeah,
in
yeah,
Pakistan. And then what happened was those people never put the pension, and they are still here. I know them, obviously I can't name them, but
yeah.
and then those properties and plots are gone into their inheritance and gone, and they are living on a state pension. And I have cases where the person is not qualified for even a state pension because his tax return weren't add up to where he should pay in 52 weeks or of
Yeah.
PSI or all those. Your aim should be that if you're a director or IT contractor, that you must make a 2 million fund of your pension. If you're not
Correct.
making 2 million fund of your pension, that should be reached. You're not saving any money because business could go and tomorrow and close or anything. As Brendan said, that money is safe for you. And we never think about after 65 or 67 when you may not sit on a computer for 8 hours, 10 hours, and you may not have the same expertise, and new people come Java C or Java 3, I don't know, these languages come and you have no expertise for that. If any IT contractor or a professional not putting pension, I think that this is a mistake.
Yeah, absolutely. And the funny thing is, if someone built a 5 property portfolio, I would get them to do it in a limited company and pay themselves a small salary because you can pension off all the rental income via the limited company. You can't do that. And Irvin hit on a very good point. Unfortunately, everybody focus on property because they're comfortable with it, but it's actually very tax inefficient. All right. So, you're hit hard on the tax you generate. And then if you built it up over 20, 30 years, and then you want to sell it or you want to live off the rental income, you're hit again hard for the tax. So property has its place, but there's five assets. Equities, number one, property, renewables, which are alternative, cash and bonds. There's 5 assets, and you have to spread them across your portfolio. Unfortunately, because it's an easy asset and you can leverage up property. In other words, you borrow. That's why a lot of people go for it. But 14 years ago, 13 years ago, it all came crashing down.
I think there's questions coming here.
Yeah, the property, there's always going to be downturns, right? It's just if you're caught up, I've seen a lot of people with, anywhere from 1 million portfolio to 100 million, and they all got caught and they lost an awful lot. Property has its place, but it has to be strategic. It has to be in your portfolio. Like, I'll give you an example. I have a client there, and he went into property 10 years ago, and he's a lot of cash, and his wife works for the big multinational, so she's with great idea of diversification. So she gets a lot of shares. He manages the kids and he used to work in New York, so he came back from New York, does some maintenance. Okay, so what they did, and I said, be careful with your property portfolio, it's getting bigger. They sold shares and bought property debt-free, down in Roscommon and Longford and places like that. Now he's up to 100,000. So that's a good strategy. You sell shares in your multinational, you sell them, and you buy cheap property. Now, he doesn't really care about the capital appreciation. He only cares about the income. Still has capital appreciation, okay? But look, investment property beyond a certain price is worthless. If you overpay for it, it'll take you donkey's years, tens of years to get your money back. And that's what I see going on these days. Whereas the tax efficiency around pensions is doing the exact same thing. It's extremely tax efficient. So it's building your assets, and one day you'll draw down that income. And there's too much of a focus on property, too much, and that's the media, the world, and everything else. Yeah.
Sure. So these are wonderful insights. So that's why I'm trying my best to not interrupt you. But we are also getting some questions from the Facebook.
No
So
problem.
this is a live question, and so especially coming to Brendan. So what age is right age to start pension if my employer is taking from my monthly salary? Will I still qualify for state pension?
At any stage, thanks, Bilal. At any stage, you should start a pension. If the employer is paying into your pension, it's like a golden nest egg. It's fantastic. The employer pays in, you pay. There's no cost on your side from the employer, none. There's no tax. And in fact, the ideal solution for a lot of the audience might be if they're in multinationals or they're in firms that they have a group scheme, employer pension, they three things: employer pension, no cost to them; employee pension, 40% tax relief, and then they can have what's AVCs. And essentially AVCs is the same as an employee pension. But as you go from 30s, 40s, and 50s, the amount you can pay, it's higher. So, for example, it's 15% in your 20s, 20% in your 30s out of your salary. This is the amount you pay from your salary. 25% in your 40s, 30 and 35% in your 50s over the 5 year, 50 to 55, 55 to 60, and then 40% in your 60. Now that's max salary at 115,000. The government stopped it; they capped it up. The amount of people don't realize that they can shove small sums into pensions and they grow vertically. So, for example, I say to people, do a dual pension strategy. Do a monthly amount, start it at a reasonable level, and then do a lump sum at your year end when your accounts are due or you get bonuses from your employer. That's all tax efficient. And it's just building your fund. And then when a fund reaches critical mass, say 100 grand, it actually starts to work itself. So if you get 6 or 8% per annum on that, that just compounded, say from 40 years of age to 60, that'll turn into 300,000 on a nice return. So it works. And I think the problem is the media and certain organizations confuse pensions and investments and life assurance. They've been around for a couple of 100 years. And when you take advantage of them, you do very well.
Sure.
And given the time, I have a long list of questions. You go through each question so I can answer those because I'm
quickly. Let us go through like quickly, and then we come back to more things. So the next question I had got is that in case of multiple owners of the IT startup company, if like in any kind of bad situations, like if one of the owner dies, how does the ownership is managed? Ownership is automatically transferred to the spouse or children, or something needs to be done?
Okay, the company in Ireland, there's a Companies Act, which is 2014 Companies Act. So whole companies are monitored by that act, and which get amended time to time. So each person is issued shares. Okay, and whichever his next of kin is, share can pass to that person, or they can dissolve the company, they can strike off the company, they can transfer share to the next company. So you don't need to be worried about those things because there is a standard set of legislation there which do all these companies. So no, the shares can be transferred to their next of kin and through their will, or they can close the company. They have all the rights which they have. They won't lose anything if they die.
Okay, sure. Thanks. Next one is, is it possible to register a limited company while being a pay employee?
Yes, there is no. Yeah, there is no an issue. Anyone who is PAYE employee, they can set up a company. Company setup cost is more likely €150. And annual cost of a company, small company, would be, as I said earlier, between €1,000 and €3,000, depending on how much company's activity is and what is involved in there. And there is no. A lot of people is worried about that my passport will be affected if I am not a company director, that I will not get citizenship or my visa will be delayed and blah, blah. I get these all FAQs every day. There is no problem with your passport being approved late or early. Even you have a good businessman. If you have a company, you are a director, you are a well-mannered citizen, you will get even priority for those bases. But I never had a case where a person was director or something. And I even got a request once from a doctor. He said, "Can you close my company?" I said, "Why is that?" He said, "Because I thought PAYE doctors are getting their passport approval earlier than the company owner." I said, that's I don't but you will not believe me. That doctor is my friend. And he's a very family friend. I tried to pursue him that, "Dr. Saib, this is not the case." But I still had to close his company. He gone back to PAYE worker. He hasn't got the passport. I don't know if he got it.
So like you found, like in that case, once like if you are also employee and also if you have a company, then how does the tax or the pension work together as an like individual for you, like in that case?
Okay, even you are a director of a company, you are still employee of the company. You can take wages from there. Same PAYE rules applicable to you. Only difference is you may not, if you are proprietary director, you may not pay employers PAYE, PRSI, which is 11.5%, which is saving. First pension scheme is even better. If you are an employee, you only, okay, maybe let leave that for Brandon after that, but you can still pay the pension. You can make a executive pension, lump sum pension end of the year, and save more your company taxes. And there's no changes to your taxes at all, because tax works once you become a doctor or owner, you file a Form 11 at the year of end. And every income is your rental income, your foreign income, your PAY income, your Case F income, Case E income, all comes to add up, and then they apply tax on that. It depends on your marital status, depend on your dependent children, all these things involved in there. And then you also pay CGT tax on there during this. So there is no different tax treatment. You will pay, a tax owner and a simple person will pay same tax, PAYE, pay as you go basis.
Got it. All right. So next, so one of the question we got is about a contract job. So some of the IP folks have moved recently from the permanent job to an IT contractor job. So now they are working as a contractor. They have pension account through the employer in the past, but now being the IT contractor, they are not contributing anymore to any pension plan. What are the options they have to secure their future in this case? And so now they will have two pools separately, or somehow they can join these pools. So how the pay, like in the past, and contracting now in the future will work together?
Over to you, Brendan, I think.
Yeah, very good questions. That's always time. First off, they should have a pension. Okay, so they can set, if they're a limited company, they can have an executive pension. It's called a one-man executive pension. There's some rules coming down the line. It's going to change that. So they should be doing it this year if they're going to do it. It could be gone next year. EU rules coming in. They can take the fund that they have. They can set up their own executive pension. So if they had a previous fund with a multinational or large corporate, they can take it and transfer it into their own fund. So it's their own fund. They manage their own fund and they grow it. So that's what they can do. And like IT contractors, particularly in limited companies, or if they're billing directly to a company, they're ideal for pension planning, because a lot of people pay a lot of tax, and it saddens me that they don't actually do pension planning because they're just handing over tax. And the key is to build up a fund, maybe like that, take an amount every month and put it into a separate account, so they get used to that, and it's discipline, and then they have money at the end of the year to put it into the pension plan. So it works quite well. But also, I want to touch on an element of personal protection too, and I'll just say it briefly. A lot of guys working for themselves, IT contractors, people in multinationals, they should check first, have they got a pension plan? Secondly, have they got income protection? Because that's extremely important if anything happens to them. So income protection gives them a weekly or a monthly wage that protects them and their families if they get sick, accident, injury, that type of thing. Automatically pays after 3 or 6 months. They can check that, or it can be arranged. I can help them look at that if they don't have it, but it's actually tax deductible too. It's a check of their employers, they've got debt and benefit service. And if they have that, it's usually 4 times salary. So you're on 80 grand, you're 4 times salary, 320,000 life cover. And that should be assigned to their spouse too. They should check that, particularly if the spouse is abroad. Should check the rules around that. And finally, life assurance, I believe, I'm a big practitioner in life assurance for the last 30 years. It's a wealth protector, but it's also a wealth creator. For example, I have a product there that is what's known as whole of life. So it lasts, you hit the soil. I know that's a hard thing to think about, but it lasts forever. But it also has cash back after 15 years. So, and you can create it, you can take it out on yourself and your wife. You can actually create it for wealth, intergenerational wealth, to leave your kids money and to get rid of tax off their assets in the future. So really, overall, there's there to generate wealth, protect wealth, and grow wealth over the long term.
Sure. Thanks so much, Brendan.
No problem.
So, I have a list of questions I already got, but I'm seeing a lot of activity going on the Facebook. So next question is coming from Faizan Zahid to Irfan. Even if I'm a self-employed sole trader and not having a limited company, I can still get the Irish, citizenship without any issues. So having a limited company will not help in getting citizenship. So any thought?
Yeah, my topic is not immigration today, but I know from my experience, no, there shouldn't be any. Immigration is a separate thing. You have to be legally resident in Ireland, have a reckonable residency period, and you will get your residency or passport regardless of you are a director, shareholder, or PAY worker. That will not affect your status, not at all. Never happen.
Okay. The next one is also coming. Is by Hamid M. Krolvi. Can you have a sole trader business and second business and limited company both at the same time?
Yes, even when you become a director of a company, you actually a sole trader that time. You have to file your tax return. But one is very wrong thing happening in our community. Everybody's go and set up a self-employed business. I have no problem with that, which should be normally people do in the beginning. But I would suggest, especially people who are doing work on Amazon, they are IT projects they are doing. I would say, please set up a company, because in order to set up a company, you will get a way of incorporation. Because when you are self-employed, your PPS number is used, your own bank account is used. You are responsible for all the liabilities and everything. Once it's a company, you have a separate tax number, you have a separate bank account number. You can close the company, you can sell the company, and you even if you have a bad year, or you can liquidate the company, and you don't have to be a liability on yourself. So set up your own company, and one company you can set up 10 business names: online selling, offline selling, repair, consultancy. Behind would be a one company. You can have a 10 business name, and you can also be a sole trader and a company owner. And one person can be a 25 direct can set up a 25 companies in Ireland. You can be director of 25 companies at a time.
Got it. All right, thanks so much. Now let's go to the next session. So one of the question is in this area. So this question actually came, like prior to the session. I am Irish, citizen and doing contract job. I'm planning to move back to Pakistan and keep doing remote IT contract jobs. How my tax, PRSI, and USC will be managed in this case?
Okay, there is something that a lot of people don't know, especially foreigner people. There's something called PAYE exclusion order. If you work for an Irish company and are not resident in Ireland, then your company in Ireland will get a PAYE exclusion order on your behalf. This means that you will not pay a PAYE taxes on your income when you are not living in Ireland. But there are certain conditions apply. You should not be resident for 183 days in Ireland, and that's you can get, and you will not pay taxes. But normally bigger companies don't apply for that. They don't know, or maybe they're not comfortable with this one. So the best thing for that is if you work for an umbrella company. Let's say we provide umbrella company, we understand your circumstances, then we can apply on a PAYE exclusion order on your behalf. Then money comes to us and we pay to you. And if you are part of the year you are not resident in Ireland and you fulfill the terms and conditions, you will not pay tax. It's called PAYE exclusion order. You can Google that.
Sure. Okay. Just for the live audience, so I know that we're like almost the time, but still we have some of the questions which we had got offline that we need to cover, and also we're getting some questions from the Facebook channel. So we are now planning to spend like another 10 to 15 minutes, hoping like our panelists are fine to help.
Sure, no problem.
Yeah. Okay. So next one is in the category of pension options for IT employees. So some of the folks, have a common, like issue, or you can say an advice they're looking for is that they were in the permanent jobs in Ireland for last, many years, like around 5 or 10 years, and somehow they have not contributed to the pension. So the question is, if they are now motivated and they understand it well, can they start back in time now, Brendan?
That have moved on from being civil servants, is that?
So they are in the permanent IT jobs in the private sector for last 5 years. They're still being employed in the same company or different company, but now they are thinking that I can start from this year, for sure, if I want to contribute to the pension, but can I go back in time and I can pay for my last 2-3 years of pension so that I can
1 year. 1 year.
1 year.
Now, if they go limited, they have a great thing called maximum funding options. So if they're limited and they pay themselves a salary, even if it's 10,000 a year, okay, you can go back and you get extra amounts of money that you can put into your pension. It's called executive pensions, a group pension, and it's very, very good. Now, the problem is, again, with regulations coming, that could change next year, but it's in at the moment. So the longer they have a limited company and the more salary they pay themselves, they can, if the company's doing very well, it's very profitable and holds good cash reserves, well, you can literally write a check from your company, which is a legal entity, to your individual person into your pension, which is your own separate account, which was really, really smart and really tax efficient. So they can do that. But really, the question is how much of a fund, how much of a retirement fund they want. That's the key question for everybody. So as Erfan said, they should be like IT company directors are doing well. They should be funding max 2 million. Now that's challenging, okay, for a lot of people. But you've got to start this process with a fund and goal. It's the fund. So if you have 500,000 fund, 750, 1 million on retirement, now you need that level of funding. Because if you retire at 65, your fund has to buy you 20, 25 years of income. So think about it. You know what you're earning now. And if you're earning over the next 25 years, 20 years, millions, which a lot of people do, you should be transferring a good bit of capital away, income away from your employment or your company into your own fund, because you need a lot of money for when you retire. And that's the stability of financial planning too, is that if you do pension planning, you do it well, investments and other areas, property, whatever, you need stability when you retire, which is stability of income. I call it guaranteed income. So you draw down a pension, and if you have a decent fund, you draw it down. Unfortunately, if you go and you blow 10,000 down in some casino, I'm not sure anybody would do that here, but if you did, we had income coming in, say it's 4,000 a month pension. Well, then you say, well, listen, you're okay. You shouldn't have done that, but you're 4,000 a month coming in, so you can live. It's not a disaster. That's also, it's relevant also because the financial crash caused a lot of psychological fear of money and losing money. But actually, the markets and the equities and pensions and funds work quite well. It's called the efficient frontier. So you put money into companies, they go into the stock market, they make a lot of profit. Right, more people invest into the company, they get more profit. Their shares increase, their dividends come back. It's efficient frontiers. It's a theory. It's a stock market theory that the stock market always beats everything, always. And it has done for the last 100 to 200 years. It beats property, it beats bonds, it beats cash. So people just need to be comfortable what they're doing, and they need to, access the right pension products and investments for themselves.
Sure. Like I must say, folks, that like I had a list of questions, from like other folks, but I'm learning myself a lot, and I feel that we need to have, more sessions on this topic, to be honest. Like it's a big field. So another question which came like upfront was about, some of the folks like are saying that, okay, if I really want to go ahead and I want to choose an accounting firm, there are so many advertisements coming, from everywhere in the world. So what are the key aspects I need to look into an accounting firm to choose it, to take care of my, accounts?
I think that's a very important thing, because that's where people make mistake, because there's very little difference between a bookkeeper and an accountant. Okay, and normally we will go to a bookkeeper and then get stuck with them. In order to provide services in Ireland, there's two things are required. Number one, a practice certificate, and number two, professional indemnity. So if someone do not have a qualification, a practice certificate, and professional indemnity, I will not choose that firm. My second thing is, okay, for payroll, because we have to do weekly payroll and there's a lot of deadlines involved and all those. If the person is only one person and do not have a firm or training or those, that'd be another problem. If this person goes on holidays, his accounts are late, which require audit. Look for people, not an individual sole trader, maybe a firm as well. I'm not against those people. In any case, they could have a very good setup, or they can still manage it. And the second thing is, contracting is different. And if you want to be a contractor, that is operated by umbrella companies. Every accountant may not be able to provide a contracting solution. You have to find an accountant who has umbrella companies, because this requires a professional indemnity of, I think, 1.3 million and 13 million of employers liability and those. So each contractor, when we recruit contractor under our company, we have to insure them under our umbrella company. Normally we only take 6 people under one umbrella company because the insurance. So professional qualification, professional indemnity, make sure they are firm, and you go, because I've seen people where they have missed the deadlines and then they have to get their company audited, or they are fined on their taxes as well, because the person was on holidays for 1 month in Pakistan and something happened, So that's the key criteria I think somebody look for.
Sure. All right, thanks so much. Now, next question is about a limited company and shares and tax. So from a limited company account, if I invest some money in stock market, and if I don't sell the shares in a given year, and then does it need to be declared because the final earning is not known at that point of time?
Yeah, so we only pay tax in when you invest into assets. You only pay tax when it become a realized income. If it's unrealized income, you don't pay tax in that. But you do declare, when your company buy an asset, if the company's principal activity is an IT, that means they can 12.5% tax will applicable on IT income. And if that income they invest into a property, that will become a CGT for that company, capital gains tax. They will pay a 33% tax, or the calculation is different. So they will not pay. They have to declare of the cost, and depending on the accounting policy, but they only pay tax when they sell the share. Same if you buy a property and the property price go up, you don't pay tax each year because price is up now. You only pay tax CGT when you sell the property. So it have to be looked after when you realize the income.
Okay. I think that is also an important aspect, because the other question is about the same. So, like in case of shares, it is on a brokerage, like online broker firm, and you can sell shares, but you can keep the amount in the broker firm. You have not, taken out into your bank account, right?
No.
So,
This is a different scenario.
Yeah. What is the
Yeah, this is called your trading account. If you selling your shares between that, but you keeping your money trading into trading account, and you reselling and buy, you have to FIFA first in, first out, or first sell buy. You have to calculate tax on each share, and you have to pay tax. And CGT is filed twice a year. So if you file first 6 months, or depending, you will pay tax on that.
Okay, so it doesn't. So one don't need to wait to take out all the money into the bank account. Actually, even it is on a trading account, you have to keep looking after all these things.
That's okay. Right. I know this gray area is being used for the cryptocurrency people, because they keep in USDT, which is not a fiat currency, and although this is need to be explanation from the revenue. But if you're talking to these shares and stock in normal, once you sell it, that is sold, and you pay tax on that. Obviously, you pay tax only on the profit, and there is a tax credit of €1,272 on each year you sell the shares.
Got it. Okay, so next there are two questions about so those folks who might be moving the country. So this one is about just give me a second. Yeah. So I am not contributing to pension, as I think I may move out of Ireland to Pakistan or some other country. So should I still contribute to pension? What are the pros and cons of this? Will I be able to move my pension along with me to Pakistan?
Okay, well, it depends how long they're going to stay for. In the short term, if it's a year or two, probably not worthwhile contributing to a pension, because it's a difficult process to transfer a pension from one country to another. It's under what's known as QROP legislation. It is possible, but it's extremely time consuming and very, very labor intensive on the paperwork. And if that particular person was going in the next 12 months or so, I'd question whether they should put money into the pension side, unless they have a very high tax bill. They can put it in, and they can reduce it, and at some point they'll probably be able to transfer it. But I've only seen it in the European Union and Australia and America. I haven't seen it in from Asia back here or here back to Asia. It could be quite difficult to do. So they'd need to contact their employer or whoever they are, a financial advisory firm, to check that.
Yeah, next question is exactly on the same thing. So, and I'm not sure, Brendan, if you may wanna like answer this or no, or maybe like offline. But they're saying that like, are there any pension management companies in Pakistan where I can move my pension to? What are the tax implications of moving pension out of Ireland? And also, because the pension age in Ireland is different from what in Pakistan, like how does this all work then if I have to move out the pension?
That particular individual, they have to check first off their pension company here, if they can be moved over to Pakistan. And what it is when you move it over to another Pakistani firm or pension company, that firm has to accept it. So it's, I'm sending you the money, are you willing to accept it? That's the only way it's done. Yeah, so they would have to, first they should contact the pension company here. But look, the bottom line is, if it's very awkward, the money stays and it's accessible when they retire. So it depends on the size of the fund. If it's a large fund, they might want to move it. If it's small, 5 or 10,000, they leave it. It grows here and it's accessible in the future.
Okay, got it. Let me just go online. Okay, so there is a question, guys, here. So let me show the question here. So by Umme Muhammad Jan, good forum all there. If my husband sets up a limited company and want to show his spouse as secretary who has stamp 3, is it possible for him? Maybe a good way fun.
To be honest, for company secretary is more likely a title these days, and even a company can act as secretary for a company, or anyone can act for a secretary. I don't know about the legal implication, but I because company secretary is more likely you're filling a requirement to which signs certain documents. And we have a lot of the time where we have appointed their spouses as a secretary regardless of their citizenship, because they're not working really for that company in any capacity. So I would say, I because it's a legal question, I don't want to answer, but it is not an important for persons because even somebody sitting in Pakistan can also act a company secretary. And even if they have another company, that company can act as a company secretary. And if a spouse here, we normally put them as a company secretary, but legal status, I will not comment on that.
Sure. All right. So next we go to Zahir Hassan. So he's asking, to Brendan, can an employee run 2 pensions at the same time if he's working with 2 different employers? Brendan,
yes, that's possible. Yeah, it depends. As long as he stays within the bands I mentioned earlier. So depending on his age, he can run, if it's a limited company, it depends. It'd be interesting for that chap to send me an email. Whether does he mean that he's working for an employer or his own company? Essentially, you can run numerous pensions, but you have to be careful that you don't breach funding limits. There are revenue rules. But yes, it can be done. 2 different pensions, 2 different employers, as long as you don't breach revenue rules, which is very important.
Got it. Okay. Next, so that is again about pension. So Brendan, I have 2 income sources. Do I need to set up pension from both income, or one will do? By Mustafa Shuja.
One pension may do, depending if he's got 2 income sources. We might assume he's either a sole trader or a contractor. If he can set up a personal pension, which would do for all income. Okay, if he's a limited company, he could set up a limited company, and when he has a limited company, the income comes into the limited company. He would have one executive pension that would run that. But if he's 2 income sources, one pension, personal pension. If he's a sole trader or a contractor, non-limited, personal pension will do for both those incomes. Sure. Again, within the revenue rules.
So like in short, I understand that so the main rule is, as far as we are not breaching a threshold, so these combinations are possible, like in general, right?
Correct. The threshold is based on your income percentage, your age, your salary, and then the ultimate threshold is maximum funds you can have, anybody, is 2 million. Okay, company, director, individual. Above that, it's very, very punitive on tax. Now, if you're in a lucky position, which is some people, they grow their pensions aggressively. If you're in the lucky position of retirement to have over 2 million, you just stop your pension, you curtail it. Otherwise, it's heavy. It's very heavy on tax. It's 70% over 2 million. So that's what you pay on tax. But look, that's the main thing is to fund for the retirement pot that you're comfortable with. So it's basic maths. If you fund 500,000 and you're looking for a return of 5% on your pension or annuity, which is a form of pension, that's 25,000 a year. If your wife had a similar, your spouse had a partner had a similar amount, 500,000, 5%, that's 25. That's 25,000. Now, the good thing about it, the world will change again in the next 20, 25 years. So when we're all retiring, interest rates, annuity rates should be higher. Not good for debt, but good for pensions.
All right, thanks so much. Now let's go to next question by Faizan. I'm a sole trader. If I have passed my VAT threshold in 2020 and will likely exceed it in 2021, okay, if I register for VAT in 2021, do I have to pay VAT returns for historical 2020 and 2021 both are just from 2021 onwards from date of my VAT registration?
Okay, there is a very simple. You can make it as complicated as you want.
Yeah. So
very simple question. Once you reach your threshold, you start paying VAT on that. If you are not accounting for VAT from that date, you are being a sole trader, a director. You are the person who is responsible. You can register your company backdated for VAT and pay tax from VAT from calculate VAT from that date. Once you reach to the threshold, in order to be legally compliant, the day you reach the threshold, charge the VAT from that date to your customer. If you haven't charged it, then you have to pay that VAT, and there is no exemption for that.
But the threshold is per year, or it is some kind of accumulative?
It is for annual threshold. Yes, it is annual threshold. But some people start company now, and 3 months after they reach that threshold, so they have to be registered from that date.
Okay,
they can't wait for a year.
Got it. Okay, folks, we are out of time, but to be honest, I really appreciate you guys. You guys spent the time like over the weekend and like overtime. Like I want to thank to you, for time and looking into the answers. Now I'm gonna welcome Nawaz, who is the main like the committee member of IPIP, and he wanna share some insights of the future work and anything else you wanna share before we like do a wind up. Over to you, Nawaz.
Thank you very much. First of all, I would like to congratulate Ahmed, yourself, and our speakers for delivering such a fantastic webinar. I'm sure our viewers will find this information very useful. IPEP now has become a leading and a representative platform for Irish Pakistani ICT professionals. We will continue to deliver a fantastic and quality materials to our viewers. In parallel, we are planning to start a couple of new initiatives. Let me just share my screen very quickly, Ahmed.
Sure.
So the first of all, we are planning to start educational and upskilling initiatives. We already have started Angular instructor-led trainings. We will be planning to.
Are you sharing a screen? I can't see your screen. Like in case you want to share, just to.
Give me 1 second if it's not sharing. Can you see my screen now?
Yes, now I can see.
So we are planning to start 3 initiatives for the summer. The first one is educational and upskilling initiatives. We already have started Angular training. That's instructor-led training. We are planning to launch another instructor-led training in Python, Java, big data, artificial intelligence, and machine learning. We got a huge demand for kids to learn programming, and that's going to happen in next couple of weeks, where we are going to teach maybe a website development, HTML, and a basic gaming. The most important for those guys who has number of years experience, or maybe the young students. So we are going to start a closed group sessions for product and services ideations. So these closed group sessions where we are going to discuss or maybe bring some ideas, build some ideas, and starts new business initiatives and some startups. Again, thank you very much, Arfan Hamid and Brendan Kelly, for giving your time to IPIP. Definitely, this will be very informative, all of us. For the bigger community, I will say we have a website, ipip.ie. Just sign up, become a member. We are having a multiple initiatives where you can take loads of benefits. In parallel, you can build a big networking within your ICT community. Again, thank you very much to everyone.
Thank you.
Ahmed, over to you.
So like at the end, I just wanna give time to like Irfan, like, and Brendan, if you wanna say something, before I stop the broadcast, like anything you may like have thought, and I might not,
And no, I would like to thank you and IPIP and your committee and Nawaz. And I have learned from Brandon while I was the panelist, so I learned a lot of things about pension. I maybe need to tweak my pension after that. We will be keep in touch as well. And the other thing is, I think the one or two questions were that what type of expenses they can claim, and the other thing was that which they should choose, company or contractor. I have sent you two guides. Maybe you can circulate to your people if they want to answer, because that is long question. We cannot really answer in a short time. So we have full guides on that the person should choose contractor as a contracting job or a limited company, and what type of expenses are qualified. We have the guides on there. You can share that. I sent you in a WhatsApp. And finally, thank you very much. And it was a great platform to be on.
Okay.
Thank you very much.
Now we go to so maybe like over to Brendan, if you want to say something.
Yeah, no, I really enjoyed it. It's very interesting questions, and thanks to IPIP. Happy to engage again in the future if you need me. And I wish everybody in the whole platform the best of luck, and hopefully they start doing their planning. Okay,
Thank you very much.
thank you.
Thank you so much. So thanks to the audience who have joined us over the Facebook or YouTube channel or the LinkedIn. We'll come back to you like in a couple of weeks again. All right. Thanks so much. Take care.
Thank you.
Thank you.